Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, April the 9th. So today is weekly jobless claims. And we also have, that comes out at 8:30 Eastern Standard Time. We also have, this doesn't look right. Hold on, here we go. That's the proper one. I was looking at the 15th. Weekly jobless claims, then the PPI, that's the Producer Price Index. That comes out at 8:30 a.m. as well. That's inflation at the producer level. I'm expecting deflation. If you see inflation, look out below. CPI, or CPI is tomorrow. Apologies. Consumer sentiment also comes out this morning, and that's at 10 a.m. Wholesale inventories at 10 a.m. So today is going to be a huge day in terms of reality. So far this week, the markets have done a very, very good job of shrugging off the reality that is economic and focusing on the headlines, which have been improving of late with regards to the virus, and thank God. Our friend Sam is here. Good morning, Sam from Italy. He's doing better over there. Uh, we're seeing improved headlines here. They're expecting a lower death count, and that's a great thing. But we are going to have to deal with the economic reality, and they're expecting 6 million new jobless claims versus 6.6 last week. So get ready for a very, very explosive day today. It's going to be really, really interesting. Let's get to the pre-market activity. Now, when I went to bed last night, the futures had just rolled over. This is oil. I wasn't watching oil, but I just have it in front of me. It's up big this morning. Up over 4.5%. Looking good. All right, to the equity futures. Now, we are short of equities. I did not go adding yesterday because at this point, I'm looking for a break. And we were higher. We rallied back off the lows of the session. We're now flat on the session. So there is a lot of optimism given the fact that we did rally back off the lows of the overnight session to go positive as we're heading into some really tumultuous economic data. Not to mention big bank earnings next week. The Russell 2000. Yeah, we're giving up some of our gains here. We're still positive, though. Good morning, RL. Jedi. I'm going to, for whatever reason, Sam, they blocked your message. Italy report Prime Minister says he has. I just unblocked it. YouTube does that from time to time. They're very sensitive about this CCCP virus. Yeah, that's expected. Good morning, Cap. Interesting. Yeah, this is not going to bode well for the EU. Not at all. Okay, so we're coming off the highs of the session here, still positive on the small caps. I will not be adding more to the short side until we get some visibility. Let's go to the S&P 500. All right, so you can see we just saw some real dramatic selling. We even made a new daily high versus yesterday. Yeah, in the past several minutes. So it looks like we're about to go. Let's just say we're going to go flat. I don't want to jinx myself. So what was a nice recovery is now being given up, but we're still positive. Taking a look, let's bring up the US dollar. Yeah, the dollar is weak. We this is a 4 hour chart. We broke down below the lower band of support on the dollar, and we did so here yesterday on the 8th in the morning. And when you take a look at bond prices, this is the 10-year. We're up this morning. But if you take a look at the TLT, or we're seeing a breakdown there. And that means that yields are ticking up higher. So if you see bonds and the dollar drop in tandem, that's a crisis of confidence in the U.S., and that's one of my biggest fears. Taking a look at gold, we're seeing a big move here this morning, up over 1.25%. The miners are up this morning as well. Silver, of which we're also long, up over 1.5% this morning. I think we have even more upside potential here on silver. So I'm glad we didn't stop out on this breakdown the other day. We saw a little bit of weakness, but given the economic data that was coming out, I did not want to divest of our positions. Anybody seeing gasoline prices drop anywhere where they live? I read a report last night that's supposed to drop in certain areas down below $1. I took my car out for a spin over the weekend. Gas prices, despite the weakness of oil, haven't dropped a penny. Cat 26 golf courses on PEI. Prince Edward Island, I remember that. May not open this year. We depend upon tourism a lot. Oh, really? 150 cruise ships. Wow. Yeah. Yeah. Interesting. Sorry to hear that, Cat. Gasoline, if anything, looks as though it's basing here. And we could move up higher. We're right there. Now, taking a look at food prices, they came in a bit. They were stronger earlier in the week. That's wheat, corn. They came in a bit. All right, so that concern about deflation that I had is somewhat warranted in food, which is surprising, to be honest with you. I expected more in food than inflation in food and deflation in electronic goods and whatnot. Palladium down. Platinum up, looking good here on platinum. Oh, that's good to see for you. Gasoline at the pumps dropped from 130 a liter to 71 cents. That's a huge drop. And not here. They're gouging the heck out of us in New York. I want to circle back to the NASDAQ 100. We continue to lighten up here. But still, for all intents and purposes, flat ahead of this economic data. I have to be honest with you. I'm in shock that not only did we close positive yesterday, but we rallied into the close in advance of this economic data. So what that tells me is that there's a whisper number out there that's pretty high, and that if we don't, probably higher than the 6 million expected jobless claims today, and if we don't hit that number, well, that's all good. The markets may just head higher. I think that the traders are focusing way too much on the headlines that are becoming more and more positive about the CCP virus, and not focusing on the economic realities. You had J.P. Morgan come out yesterday. There will be no small business loans that aren't government backed out of J.P. Morgan. Let's go to natural gas. Natural gas coming off of its big rally. I don't know if TA is out there. Good morning, Cherry. I don't know if TA is out there, but I'm going to go over nat gas in a moment for him. I'll go over a couple of more symbols as well. All right, so here's the UNG weekly chart for TA. Weekly RSI looking rock solid. Stokes looking really good. What I like to do is take prior support and resistance levels and extrapolate them out. And you can see what was resistance all the way back here remains resistance. So the downtrend in that gas is still alive and well, despite the big rally this past week. Now, if we close above this upper band of resistance on a weekly basis, expect a retest, probably multiple retests of the support level, and we may move up higher here. My concern is with demand. You have all these factories that are closed. Where's the demand going to come from? Especially as we head into the summer months. Daily chart. A beautiful 3-day rally. Yesterday, a pullback. I think you need to wait and see whether or not we're able to close above resistance on a weekly basis. A lot of resistance up here. So I couldn't buy these. Well, I couldn't buy nat gas right now. Really, it all comes back to this. Your weekly chart, monthly chart, same old story. The downtrend is alive and well. Things are improving, though. There's no doubt about it on your indicators. But price and volume matter most. And at current, prices come off of its highs. We're down below support. Volume is not great. So I would avoid, because all I'm seeing is a commodity that's trading up and into resistance yet again. What we need to see is this: a breakout, pull back, and a retest a couple of times. I'm not expecting a big rip like this. This is like a once in a lifetime deal, but um, nice, nice rally, and I would expect a nice rally if we do break out on a weekly basis. Right now, we have resistance above. See if we see anything on a monthly chart. Yeah, W formation forming here. Things are improving, but I'm not ready yet to pull the trigger. Dallas seems like everything is going to rally into Easter. Then next week, reality sets in. There's the data to back that up. That's a great question. The reality is what data. There is no real data that we have. So traders are buying on hope. They're really relying upon digital print to guide them, and you know I've been saying all the while here that I believe that we are in a bear market rally, a dead cat bounce. Here's the spider on a weekly basis, and we're right up and into resistance here. But the market's always right. I can render an opinion, but if we manage, as a matter of fact, I don't want to use this chart. If we manage to break out on a weekly basis above resistance, well then, you know, I would expect a retest. I don't even like this chart. I would expect a retest of support. Here, let's just use this. I mean, this is a heck of a rally here. I would argue unsustainable. But again, the markets are always right. So I'd be looking for today is a reaction. And to see whether or not we close out the week above 265 on the spiders, which is entirely possible. We have 2 trading days left to go. But I would expect at some point in time that we get a retest of support levels, daily chart. I don't like that chart. Here, and even yesterday, we were able to. I thought that we had to go to the short side even further, and I even acted on it on the 7th, where we had this filled candlestick. And what did we do yesterday? We put in a new daily high. I mean, this is a very powerful price action in advance of all this economic data. So, very impressive. Even the banks showed a lot of strength yesterday. I would argue, though, it's over enthusiasm. But again, the markets could stay irrational far longer than we could stay solvent. So I'm not going to look to lean into the short side until we get a validation that we are right in our directional call. And I think that while we may jump the hurdle of today's economic data, I think the banks, especially Jamie Dimon, who's a pretty straight shooter, when he announces next week, I think that reality is going to hit home longer term. Oh, that's right. Tomorrow's, yeah, right. Good Friday. That's right. Thank you. Yeah, everything in this market is faster and moves are bigger. Futures negative now. Yeah, I was listening to, I bash CNBC from time to time, and I was listening to Karen Feineman, who happens to be a pretty nice person, and she's she was talking about the volatility moves both to the up and the downside, and she was like, you know what? As a long, I'm not. She doesn't short. I don't believe she shorts. She may buy puts as protection. She says, I would just like to have a flat day. No huge move up, no huge move down. And it made a lot of sense because she just wants volatility to simmer down and go back to a semblance of normal. And while we're shooting up higher here, the price action, whether it be up or down, the price swings of late are anything but normal. So if you take a look at this price action here over the past 2 weeks relative to prior to the break in the market, I mean, it's a tale of two markets. You have these long white candlesticks here or long red candlesticks here. And I would argue over the past 2 weeks, I mean, the irrational exuberance, using Alan Greenspan's phrase, is just insanity. I don't know how people expect earnings to meet up with the price action here. I'm going to go back to historical PEs. Look at where we are in terms of historical PE. This is the magnified view. Red. You have a market with PE 20 that's overvalued. We're not there. We're just shy of it. Fairly valued is down here at 2,092. We closed out the day yesterday, what, 27.49? It's crazy. It's absolutely crazy. So apparently values don't matter yet again, despite the market environment that we find ourselves in. Let's go back. We'll circle back on the futures, see how we're doing here. All right, now we're down, like Kat said, down a quarter point on the NASDAQ 100. But still, I would have expected weaker price action. And it's not as if you had a lot of people scooping up volatility. You had people selling volatility yesterday. I have way too many charts here open. Here's E-minis. We're still positive on the S&Ps. Let's go to the Russell. Russell's still up and arguably consolidating here. So it's going to be one heck of an interesting morning once that economic data is released at 8:30 a.m. Eastern Standard Time. And with that, folks, I am going to say everyone have a safe day today. Hey, good morning, Eric. Do we believe the theory that this rally is primarily a massive short squeeze and not actual market confidence? How can you tell such a thing? Well, what I like to do is this. I like to keep it simple and take a look at volume. And volume, yesterday we had a price move up of nearly 3.5% on the S&P 500. A very strong day. And we were able to negate the prior day's bearish reversal bar. And to me, that was a short signal all day long, that bearish reversal bar. We negated it. Now, the reason why I stayed short was, well, one of the reasons, the main reason being the economic data and bank earnings next week, but volume. Volume was very light. You would expect on a day where you have nearly a 3.5% up day, you would have volume that would at least be on average relative to its prior, 60 days moving average, but it dropped off. Still healthy volume relative to historic norms, but still it's dropping off. The trend for up volume is clearly declining. And we are short of the trip Qs. Here's the daily chart of the trip Qs. Look at the volume here. I mean, if you thought it was light on the S&P 500, is it any wonder why the NASDAQ 100 is down this morning while the S&P 500 is up along with the small caps? And you have a lot of technology that's in the QQQ basket. And unlike other averages, which were able to negate the prior day's bearish reversal bar, we had an inside day yesterday. No new high, no new low on the trip Qs. And when you take a look at the XLK, which is the technology ETF, I mean, volume was even worse there on a relative basis. So this is what emboldened us to remain short into the economic data. But not enough negative price action and volume action for us to go adding. This is a 4-hour chart. You can see these up volume bars dropping off dramatically. And to be fair, not to speak my book, not to speak my book, but you have down volume bars dropping off dramatically as well, but to a greater extent up volume. So this implies to me that you have a lot of computerized trading. And so with some of the buy orders out there, it looks as though you have, I don't want to be a conspiracy theorist, but there's a vested interest in keeping this market moving up higher. And I would be a bit surprised if you had the Federal Reserve's trading desk in there doing whatever, loaning money out to JP Morgan or whatever bank out there to go out and buy ETFs. So we have to keep an open mind. I mean, these are very, very unusual times. So when you have Janet Yellen out there say go buy stocks, and it's becoming a norm for central bankers to go out and say that, at some point in time, it's going to become reality. And then the free market. I don't know if we can call this a free market anymore. With that, folks, everybody have a profitable trading day, and I will talk to you soon. Be well.